Bitcoin started moving up and our stocks started moving up. And then we realized that like the conservative thing to do is just stop there. I immediately saw the inflation in March and April in the stock market. Right? That's like being a dentist where you're going to make a lot of money every year for a decade, and maybe you'll make 5% more each year for a decade. If you've got a low growth cash cow, but the money supply is debasing at 25% a year.
Kills you.
Right? It's like the road to serfdom is working exponentially harder for a currency getting exponentially weaker. What I saw was 2,000 people doing 100,000 things right every year to make $50 million, and then watching the enterprise lose $100 million a year due to a political decision. So in essence, we're running as hard as we can, we're falling backwards. And the situation was literally hopeless, right? Like people wonder, where did the Bitcoiners' hope come from? Well, it just was hopeless, right? I mean, the operating business is hopeless, and you know, okay, you know you're going to work yourself to death for a decade and do a million things right with 2,000 people, and you're going to be worse off in a decade than you are today. Okay, that's operationally hopeless, right? And then on the balance sheet, if somebody says we're not even thinking about raising interest rates, it means for the next 4 years you're going to get 0% on your money, and it's going to be worth half as much in 36 months as it is worth today. The balance sheet is hopeless. I think that it's a defensive strategy through the Dutch auction. We had to do the Dutch auction to provide a graceful transition for our shareholders to get long Bitcoin, right? You're either long Bitcoin or you're selling out to us at a premium, one or the other. And then from that point, Bitcoin started moving up and our stocks started moving up. And then we realized that like the conservative thing to do is just stop there. And if we'd stopped there, I mean, we would be all equity, $475 million invested at $11,000 a coin or something. And that's not a bad result, right? We would have made 6x our money. But what we realized is we could borrow money at 75 basis points. And you know, Bitcoin's up 171% a year every year for a decade, right? If you can borrow money at 1% and invest it at 171%, your arbitrage is 170% on how much? Well, how much do you want, right? Like, where are you going to stop that? Because the first offering came out, the strike was 398. Bitcoin kept moving up. Our stock kept moving up. Eventually, that bond was the best performing bond of the entire year, right, Anthony? What I'm saying is, of every single corporate bond sold in the year 2020, every convert, every junk bond, everything sold, every municipal bond, whatever you could imagine, the single best performing bond was MicroStrategy convertible bond, where you could have doubled your money. You know, at some point it was trading insane amounts, like triple, you know, your money on a bond. Okay, so we had good success there, and of course Bitcoin kept moving up. And our stock kept moving up, and we realized by February that we could do another offering. The next offering was we came in the market offering $600 million. The first one we started with $400 million. This time we started with $600 million. But again, it was oversubscribed. We upsized it, exercised the green shoe. It became a $1,050 million offering. And the range was 50 basis points to zero. So we struck it at zero. And you know, up 50, 37, I forget the number, but we ended up having a 50% premium or 47%. I forget exactly. It was a high premium. It was a low coupon. The strike price was $1,432 a share. So now put this in perspective. This is 10 times the price of the Dutch auction, you know, some number of months earlier. Now, so why'd we do that? Well, because if you could borrow $1 billion at 0% interest and invest it in something going up 170% a year,
pretty good trade.
Why wouldn't you do it, right? Like every single business on earth that's debt financed presumably is borrowing money to invest in something which is going to return a higher yield than the cost of the debt. Now, I want to pause here and make one point. The reason that I was sensitive to inflation, was I immediately saw the inflation in March and April in the stock market, right? Because my inflation bogey wasn't, if I were to go to all my investors and say, I got $500 million, I'm investing it at 2% interest and inflation rate's 1%, they wouldn't have given me a pat on the back. They would have said, the S&P index is moving up 10% a year. Your hurdle rate, your cost of capital is not 1% or 2%, it's 10%. And maybe you're getting 5% yield on a piece of debt, then I don't hold my nose, but you're losing 5% a year. Half-life of the money is 12 years. Okay, fine, but like you shouldn't be holding it. You should be buying your stock back or buying another company with that. Sitting on that cash it doesn't make any sense. Saifedean says the dollar-weighted monetary inflation rate across all currencies for the last 30 years is 14%. Interesting number he comes up with. 14% is the inflation rate of the currencies. Now, that would be the inflation rate on scarce desirable assets or any portfolio of assets. And if I look at my screen right now, over the last 10 years, the S&P 500 is showing 14.15% interest, or 14.15% compounded annual growth rate.